giving the gift of stocks. Here to break it down, we've got Erika Safran, who is the certified financial planner at Safran Wealth Advisors. Erika, great to have you here with us in studio. So take me through the basics of gifting stock. How does it work?
Well, the easiest way to give stock is to transfer securities from your account into the account of the person you want to give it to. And hello there.
Hey.
So that was the first part.
Yes.
That's the easy part. But then you want to think, well, does that other person have an account? If they don't have an account, it'd be really wise if they set up a brokerage account somewhere. And the ideal way would be for them to have a brokerage account the same place you do. That would make transferring easy.
Certainly.
So transferring stocks is so much easier today than it was maybe decades ago when someone would buy a certificate and then give a certificate, and then you'd have to take that certificate and deposit it at a brokerage firm. So today it's really streamlined and simple.
Is it free?
Great question. Transferring securities at a brokerage firm to any entity is free.
Okay.
I can transfer to you or anyone I want.
Please, by all means.
I'm on it. Wait, where's your firm? But then there are some online investment firms that only operate online. I don't want to give names, but they typically charge 100, 200, sizable amounts to transfer assets. So ask the question before you transfer securities. Don't be blindsided.
So what are some of the tax implications of gifting stock?
That's a beautiful thing. There is no tax implication in giving, and there's no there's no income tax implication in giving. So I can give a gift of 1 million securities, million value in securities, no income tax to me. And the person can receive that gift, no income tax to them. And everywhere the concept is an $18,000 gift tax exclusion. So if you give amounts over that, it's a taxable gift. Well, the fact is that that is a issue that doesn't affect us during life. So for example, I could give $18,000 to every person in this world, run out of money, and then have zero income tax.
A lot of people would love you for it.
Without question, and have zero income tax implication.
Interesting.
Okay. And then why is it an issue then? Why is everyone talking about it if it doesn't impact me, doesn't impact the person receiving the money? Where it has an impact is that any gift that you make that's over $18,000 has to be reported on your tax return.
Okay.
You go, why? Why does the IRS care? I give $20,000, I'm going to report $2,000 is that I gave a gift.
Sure.
The only time this matters is when you die. Because that $2,000 that's above the $18,000 gift tax limit, that goes added back into your estate. But honestly, unless you have more than 13.6 million in your estate, you shouldn't really care.
Certainly. So is it better to give cash versus stock? How do you go about really analyzing and going through the mathematics, the calculus of which you should be giving?
I bought a stock that I paid $10 for. It's now worth $50. So my $10,000 is now $50,000. I want to give you the cash because I really like you and I care about you. So I'm going to sell my stock. I have $40,000 in gains. I'm going to pay capital gains tax and state tax on it, and probably give away a quarter of it at least.
Yeah.
So instead of 50, now I have whatever, 35, 40. So let's not do that. The best thing to do is to gift securities that have the lowest cost basis. So if I bought it for 10 and it's now 50 and I give it to you, it's as if you had bought the security in the first place.
Yeah.
So you're inheriting that cost basis.
Yeah.
Now, mind you, I'm giving it all to you. I move that appreciated stock out of my estate. I don't have to pay taxes on it to give it to you, and you receive that money tax-free.
All right.
Now, you or the recipient doesn't pay income tax on receiving it, but when they do sell it, they will pay taxes on that gain as if they had bought the stock to start with.
Interesting.
Does that make sense that I explain it? So
No,
you inherit my
broke it down
cost
very well.
basis.
Yeah, I don't want to do that.
Well, actually, it's not that you don't want to do that. You just want to hold on to it.
Sure, right.
Because if it grows enough, it's really okay to pay taxes on gains because you've done your job well. You've
As long
made
as the
money.
gains exceed what you would have to pay in the tax on it.
Without question.
For sure.
It's,
Erika.
it's always a small percentage point.
Really great breakdown on all of this and gifting. It perhaps gives folks some new ideas out there about how to gift stock. Erika Safran, thanks so much for taking the time.
My pleasure.